So when I did my video on Monday about private mortgage insurance, I had no idea it was going to turn into a three-part series, but here we are on Wednesday. Since I have a few trailing thoughts that I wanted to follow up on from yesterday's video, and the simple fact that on Wednesdays I like to share some level of words of wisdom, I figured I could wrap it all together here today. So the words of wisdom. If you ever have any questions about mortgage financing, about qualifying for a mortgage, or about anything pertaining to the mortgage industry, because you know at some point in the future you are going to need or want a mortgage, please do not base any significant life decisions on information that you may find on the internet. This industry has a ton of unique little rules, regs, policies, and procedures, little nuances and gray areas that really don't apply to most other industries when it comes to borrowing money. So reach out to a mortgage advisor or a lending professional to get any questions you may have answered, and know that those answers are specific to you and they are timely, as well as policies and procedures do change on a fairly regular basis. Now, in the example that I shared yesterday, I used a 3% down scenario with some first-time home buyers on a $400,000 sales price, and the monthly PMI with a 780 credit score in that example was very affordable at about $107 per month. Now, if I ran that same scenario and the clients had, let's say, a 665 credit score, that cost was going to be much more expensive on a monthly basis. But here we go with the rules and the nuances and everything else. If those clients with the 665 credit score maybe had a 5 or a 10% down payment, that is going to offset some of that adverse pricing adjustment due to the lower credit score, and it wouldn't be as unattractive of a payment. But in some of these instances where, let's say, someone only has 3 or 3.5 or 4% to put down and a lower credit score, FHA could be a highly advisable option, because the factor that gets multiplied against the amount being borrowed that ultimately determines what the monthly cost is on the mortgage insurance itself does not change on an FHA loan based on credit score. So in a situation where someone is doing a minimal down payment and they have a credit score that is less than, let's say, ideal, but still qualifiable and still a good score, it is one of the reasons that an FHA loan could be the perfect solution from an overall affordability standpoint. Hope you found this information helpful. Sorry this video ran so long. We will see you again, and until then, make it a great night and be safe out there. Take care.